Welcome to Banking Transformed, the top podcast in retail banking. I'm your host, Jim Marous. I'm delighted to have Dr. Robin Cura, financial services marketing expert and author of the new book, Attention Hacking, The Power of Social Media Selling in Insurance and Finance on the Banking Transformed podcast. Robin discusses how social media isn't just for consumer goods, but can be a powerful tool for financial services as well. Robin also shares insights from his book on how to make financial products go viral, the importance of becoming an influencer in your market, and why traditional marketing channels are fading away in favor of dynamic, strategic content on platforms like LinkedIn, TikTok, Facebook, and X. Finally, Robin suggests that as technology and consumer behaviors evolve, so too must the strategies employed by financial professionals to remain relevant and successful. There's been a seismic shift away from outdated marketing tactics towards engaging and personalized content that speaks directly to consumers' needs and aspirations. Even the most traditional products like financial services can capture the public's imagination and demand with strategic and highly creative online and digital marketing. So, Robin, we've known each other for a number of years, and while we reside an ocean apart, we both have embraced the power of social media and getting our own messages out. So before we start, can you share a little bit about yourself, your agency, and more importantly, your new book?
Yes, happy to do so. Most importantly to know is that I'm have a background in insurance and finance, worked in both industries. And what I'm a little bit proud on is I always say I'm an entrepreneur during the day and an influencer during the night. My wife would say it's the exact other way around, but since she's not here yet, I can claim that I, am an entrepreneur full time, and I'm actually a recovering insurance sales agent. So I could still sell you if I wanted to. So watch out for your liability insurance; might get an upgrade. But I want to say is that I have a really deep insight into what's really going on in insurance and finance. I also worked for a private bank for some time. So I cannot do anything else than insurance and finance. And at some point, I founded a blog, digital scouting. It went through the roof. We did a lot of social media. That's when we got to know each other, like 2017, 2018. I wrote an article on small insurtech startup. It became a unicorn. So we were both right. You for accepting my article and I'm for writing it. So, we have to both to be super smart on that one. And at some point, insurers and banks came to me and said, Robin, don't always complain about that we're so, lame and we're not doing modern marketing and stuff. And can you help us? And I was like, no, I'm never going to help you again. And then they were saying indicating what they were willing to pay. And then I was like, okay, Monday, 8:00. How does that sound?
Well, it's interesting, Robin, because, very much like me, you learn through doing. I mean, I started a podcast without knowing one thing about podcasting. I started writing for the Financial Brand at the beginning of my blogging time when I was with a direct marketing agency. And most of the other things I've done in social has been learned through doing. And I remember some of your early TikTok videos and some of your earlier marketing social media things with your custom designed shoes and everything else in the insurance space. But when you look at the transformation, what motivated you to focus your expertise on the broader intersection of financial services, marketing, and social media?
Well, I was really mad. I was mad at these old CEOs in C-suits standing on stage and saying, nobody will ever sell an insurance policy or a complex financial product via the internet. I was like, duh, that's what's going to happen. That's what's happening right now, guys. And I was really mad and angry at this because it was endangering the future of these both great industries. And I was just trying to get the message out. We need to change. We need to improve. We need to innovate, not for innovation's sake, but for survival's sake. And so I chose social media. And I think I did the first selfie at an insurance conference. And I still remember one C-suit going by and saying, well, great, you do a selfie. I also saw you took the train to come here. I was like, yes, but 40,000 other people too. And the funny thing is, years later down the road, he and his company became clients of ours. Of course, he needed to pay 10% extra for that remark, all kidding aside. And so what my passion is to get the message out there. And it was really like, I had the message, we need to innovate. And I really quickly found after my keynotes that other people in the industry that were still working at these large corporates are also rebels. There were rebels inside these organizations trying to innovate, to improve. And they came to me, and I wanted to reach them all. And that's why I went to social media, because traditional insurance magazines back in the days, they did not take the message. So I went to social media, and when you had a big enough following there, they followed too. And we are reaching, we have a B2B arm and a B2C arm. We have I think 700,000 followers. We reached up to 20 million people each month. It's really insane numbers. Not all B2B, but some are. So that's really, really insane. And I think, and why I'm deep passionate since I have been an insurance sales agent, I remember people do not go to their friends and say, hey guys, I got a new term life insurance, 500,000 for my wife if I die. They don't celebrate this, but they still celebrate their stupid new phone or their car. I mean, I'm in German. I love cars. Don't get me wrong, but it's an asset that goes down in value. It's not a strategic, financially smart investment for most people. And I think in insurance and banking, we are wasting billions in bad marketing, and still people don't like us, while other industries do not have the same benefit. I mean, banks, we help people to go through life financially, and insurance are helping them in moments of crisis. So there's a big mismatch between the actual significance, if you look from it unemotionally, and what the people think about us. And I think social media can play a role in order to change that. And we at Digital Scouting, we really have the mission. We want to change the way insurers and banks do marketing, and that we really become not only factually the center or important part of the life of our clients, but also emotionally. And that's my goal.
Well, it's interesting, Robin. You are probably one of only two. In fact, I'm sure you're one of only two people that I've had on as a guest who's had social media posts go viral. Gary Vaynerchuk, a friend of both of ours, certainly is one, and you're the other. And you and I both follow a lot of Gary's rules with regard to how to market, how to impact consumers, how to build content, and how to then deploy content in very unique ways. And in fact, I mentioned that you've had TikTok videos that insane number of hits. You promote them and say how many hits, and I go, I got to check this. And it's all valid. So you're very creative in the way you do it. I'm not sure how your family takes it when it happens at all times of the night and day. I do know that. But when you look at legacy banks and insurers, they're doing social media and online marketing in a very different, much more conservative, much more traditional way. What are they doing wrong with regard to social media strategy? What if there's one general or two general viewpoints that you have that you say, you know what, first off, you've got to stop doing this, or you've got to start doing this. What are they?
Two big mistakes. Big mistake number one is you give it just to your traditional agency that was very good in doing TV ads in the 80s. Big mistake, because they don't have a clue about social media, because if they would have a clue about social media, they would have millions of followers. The second one is you give it to your intern or to your niece that's 21 years old. She or he may be, young, but doesn't mean that they are super professionals. So my big tip in this for decision makers is do it yourself. Really take the phone, do a video, try to edit it with CapCut, because what you see then is it's not easy. To do a fun, small, short video is super hard. And then knowing the algorithm, then to go viral. That's another one. But you need to be able to do it in order to see if the service providers or the internal experts actually know what they're talking about. And the second thing is, but it's probably, I'm a little bit biased, that just get professionals on board that do it for you. It's easy. You can start tomorrow. You don't need to hire people. But since I have an agency, that's maybe not a neutral perspective. But that's my thing. Do it yourself. Don't go to your traditional agency. Don't let an intern do it, because the competition on social media is brutal. It's brutal, and you cannot send amateurs in there.
It's interesting, Robin, because not only is it brutal, but it's really always changing. I mean, just the dynamic around what the algorithm is going to be for Instagram, for LinkedIn, certainly for Google, it changes so quickly that unless you have an organization that is entirely focused on how to do better with social, you're not going to get there. I mean, to your point, I am less biased because I don't have an agency of my own, but the reality is not only do you have to play in the mud yourself a little bit, but you've got to find an organization that really, really understands this space and is probably, unlike a lot of traditional marketing, it's probably less important to find one that has financial services expertise as it is to find those that have social media expertise. Would you agree?
I really hate to disagree with you. Yeah,
Okay.
I strongly believe you need to have some industry knowledge, and not you don't need to know all first names of the last 27 CEOs of that certain bank or insurer. That's not necessary, or to know the org chart by heart. But what you need to know, you need to really understand. How are, for example, retail banks? How is this organization ticking? How are agents and brokers, if you're in the insurance space, ticking? Because what you want to avoid is that the headquarters is doing a funny campaign and all your big important multiplicators are hating you for it or are rolling their eyes. So I strongly believe you need to have people on board to really understand it. And what's super important is you as an organization don't want to spend time to educate your agency or your partner or in the ground rules of your industry. Industry average is like 40% disapproval rate when there comes content. And I think we are at 1 because we know the industry. But also, for example, we have a lot of sometimes people coming from other industries coming to us and say, hey, can you do this? Like car, for example. We say no. There are others that are 10 times better at car. I drive one, but that's about it. So I really would say find somebody with an expertise in social. It's the one thing, and the other one in industry knowledge, and try to help you there, because you want that pain gets away from you. You don't want another headache. You want less headache.
Great point. And I would tend to say you're right on this one. I was wrong. So, in your book, you discuss transitioning from interruption marketing, simply blowing out something dramatic, to permission and attraction models. What does this mean?
So back in the days when there was almost nobody on social media, everybody could be successful with a little bit of content. I think my early success on all platforms was a little bit defined by that. But since competition is getting harder, you need to become better at it. What does that mean? One spontaneous post goes viral maybe once in your life, but if you want to repeat this, you need to really know the rules. And so the demand of what people also spend their time with online becomes bigger and bigger and bigger. They want a bigger quality. They want almost small Hollywood movies to see. And so I think that it's increasing quality. Was that the answer to your question?
Oh, it definitely is. Yes. Okay. The fact that you need attraction models as opposed to simply interrupting, in the same sense, why does, I should say, merely having a presence on social media no longer cut it compared to actually building evolving experiences?
Well, just be there. It's like just having a retail bank somewhere or an insurance agency. If they don't do a good job, if they don't go out there to try to attract people, what is this presence worth? Nothing. You need to be there where the client is. You need to be in the channels where the client is. You need to be delivering the formats they like. If they like video, do video. If they like graphic, do graphics. If they like end-carved stone platters, do that. And it needs to have also some sort of frequency. Every day, 13,000 advertisements are attacking us every single day. And when you as an insurer or bank just send a banking statement once a month or once a year for the life annuity policy or whatever, that's not gonna cut it. You need to be there where the client is. And the funny thing is, if we look at these super successful banks, for example, private banks, but also retail banks or insurers with agencies or direct insurers, they're constantly there where the client is. And I think that's a little bit the secret, to take the recipes that worked really well in the old world and just take them and test them in digital and social and see it as a tool. It's not an attack on your business model. It's actually a great defense. And if you're smart, it is actually also an instrument to your offense.
So it's interesting, Robin, in your book, and also in a lot of content you publish online and digitally, you really talk about the fact that, for lack of a better term, not all social channels are equal.
Yeah.
There's certain social channels that do some things better than others. There's some social channels that have gone up or down in value. And Gary Vee talks about that quite a bit as far as the ability to capture attention. What specific social platforms do you think right now show the most promise in financial services?
I would say if you are into B2B and you have not one top 3 LinkedIn account as a decision maker, subject matter expert, or company, then it's time to get a new head of marketing. And if you're in B2C and you're not on TikTok, please fire your marketing department. Why? That's where the attention currently is. I have one side note, Threads, the ex-competitor came out. I think it's always a bad sign when marketing departments are there first and not some users in some niche that then expands. I think Threads is interesting if you're a bank or an insurer and want to play with the cool kids like Dr. Pepper or some other cool companies. Then go there. That's cool, but your customers are not there. It really depends where your clients are. And what I always say, never ask your clients where they are, because they will lie. I mean, if you ask me, what do you do? I say, of course, I read Plato all day long. I mean, I don't. Yeah. I mean, I don't. Yeah. At time, I don't have. I'm hanging around on TikTok and other things. But it's also there are studies that show people answer things they think that are socially accepted. Especially in these brutally political divided times, you can see this over and over. But what you should do, you should look what the people are doing. When you are in the airport or at a bus or a train, or if you're in a meeting, look what other people looking at. And I saw already that, for example, TikTok had already way older user base than even TikTok knew, because I looked at what people were doing. And of course, the 55-year-old decision maker or the 40-year-old whatever didn't, would never have admitted this 1 or 2 years ago. But I saw pretty on their phones all the time that they were there. So what I want to say with that is, don't look at people on the mouth, look on the hands, what they're doing. But then you have a superpower because you're so far ahead of so many other people. And a lot of people are always saying me in Germany, Robin, you're such a genius. You were on Twitter so early. You were on LinkedIn so early and successful. And on TikTok, I was like, yes, I downloaded TikTok after 1 billion other people did that. I mean, I'm not sure if I qualify for a Nobel Prize here. Yeah,
you may have been the oldest one, though.
Really funny. One of my first really mean TikTok comments was, "Old dude, when are you finally going to die?" And I was like 38 or something. I was like, oh my God, this is a little bit different than the insurance and finance bubble on Twitter and LinkedIn. There was a little rough street stuff going on there, but you just need to take it with a grain of salt. And to be quite honest, I have I have a face made for a career in radio, and that I, after 40, become an influencer on TikTok, and the teenagers on the street say, "Hey, Robin, nice to meet you." It's really, really humbling, and I know it's going to go away at some point, but I enjoy it every day until then.
Gary Vee says this. I refer to him quite a bit in a lot of my podcasts, but Gary Vee talks about the need to have a lot of content out there.
Yeah.
That everybody plays it too casually. They maybe get in their niche as far as what they like to do is video or audio or written content. How important do you see multiple channels and him a lot? Do most financial institutions way underplay their social media hand?
They surely do. I just had a look at the top 50 profiles of actually American decision makers in the banking industry for a project we have internally for a German bank. And I was shocked how little activity there was actually. And there are only a few that did actually a good job. There was one guy who was really good at video, another woman was really good at text. But even, I don't know, was it I forgot which CEO it was, post every 3 months. Forget it, just stop, just don't do it. But to answer your question, if you really want to use social media, not only for branding, but actually for sales, independently of what your business is in, I strongly advise to be super dominant everywhere. I remember when I called my clients back in the day as an insurance agent, said, "Hello, this is Robin Kira. I'm calling you from your insurance agency, Wolfgang Niegel. Let's talk about your policies." They were like, "Oh my God, please come. Let's have a coffee, the cookie, the cake is ready." Never happened. They were like, oh my God, do I get a root canal made? Or do I actually let this guy in? He's going to sell me something. Yes, that was my intention. But what I say with that is, years later, when I was so dominant on LinkedIn in my niche, then our clients came and stood in line. And I think that every industry can do. You need to be dominantly out there. In order to do that, you need to be everywhere, also to test where it doesn't make sense and not. For example, threats. I would say it doesn't make sense at this point if you're in B2C, for example, and we need to test a lot out in order to be early. For example, TikTok, test it out, or Clubhouse, test it out. Didn't work, but better. And you need to be everywhere. But I see one counter to Gary Vee's hypotheses. It's not only about quantity anymore; it's also about quality. So it's not only about posting something, but it needs to be really good. And I think that has become more and more fact over the last 6-12 months.
So when you're talking really good in financial services, be it insurance, banking, any financial field, are we talking about making it so that it's informational, that it helps people, that a little bit different than just entertainment, but that we're trying to get the word out as to how to better manage your money, how to have more financial wellness, things of this nature? Is that part of the quality equation?
Totally. But it's not that we are selfless. But if you look at what is taught on schools, nothing has to do with financial literacy. If you look at the best sellers at Barnes and Nobles or whatever book your favorite bookstore is, they are full of self-help books, especially in the finance space.
Yeah.
How to get rich, how to be healthy, how to be have a happy relationship. All these topics are actually topics that are super important or relevant for insurers and banks. We could, people may not like us, we have been around for some 100 years, and they really think that we know something about money. For example, how to manage it, how to keep it, how to multiply it. That's what we can. And I think to actually go into the direction of financial education is super smart, because of course you can say what they need to do. And then we also have the products that they actually can buy from us in order to achieve their goals. I think that's super smart. But, if I see one more video out there where a logo is flying in the first 5 seconds, I think I'm going to, jump out of a window, because it's you have done this like since 5 years ago. But in the first seconds, it needs to be really good. In the first second, the best quote, the controversy, there's something. Of course, it can be a little bit entertaining. That's okay. Yeah. But I think insurers and banks, don't only have a responsibility for financial literacy and education, but we know so much. We have endless topics. We can do thousands pieces of content each day if we wanted to, and helping people and be on the radar. And when they have the moment of need, and I think, I really should get that insurance, I really should get that financial planning and for retirement going. In the moment of need, they think of us and then they come to us. And that's the cheapest client acquisition ever.
So, Robin, in the financial services field, how are organizations now doubling down on personalization in the social media content field? I mean, how do you personalize what is in effect a broad brush content, but in social media?
What we see, I don't see it in social media so much, but I see it in direct marketing and direct mailing. So like physical mailing and emails and behind the scenes. We see it that they're really targeting certain demographic groups, that they're really, they're writing, hey, Jim, great to see you. How is the weather in Cleveland? Because they know somehow you are there and it's all individualized. Yep. We see it also in video. So there are actually individualized videos where your name appears, for example, maybe your logo of a company. We see this in video. We see this in pictures. But it's a very small group of people actually doing this, or a small group of companies. But, their open rates are 10 times better, and their acquisition cost is way lower than for the rest. So I think this is already happening right now. And of course, we also have a product there, but I don't want to go there since we're not operating in America. But I think that's something really, really happening all across in Europe. I see this not only with us, but also with a lot of other service providers doing that. And it really works. And some banks also do it themselves, and some insurers. I've not seen this so much yet in social media.
So how do you balance then when the end game is trying to make sales? How do you balance the social media and digital sales with needing to be human relationships as well? How do you build that mix between digital and human? Or do you need to?
I think it depends on the target group. If you are aiming for young urban people with very standardized financial needs, then I think you can be a neobank that has a super great app, super great onboarding system. I think that's totally fine. But if you're aiming for people with more complex financial needs or people that really value mutual banks or a physical person around the corner, which there are target groups still around, and I think they will be there around for a long time, that really value this. So to answer your question, it really depends on the target group. To be quite honest, 10 years ago, thought there would be no agent and no retail bank left until now. But I learned actually that there are more complex topics in insurance, but also in banking. To be quite honest, I am customer of a very small mutual bank, but I have a guy there who lend us a lot of money for our real estate business. But he can do also complex things and magic, and that no online bank can do. We tried. And so I think it really depends on the target group. Complex, non-complex, digital, non-digital. But what you need to do is don't stick to a setup because you believe in it. Always look at the numbers. When you see, for example, as a retail bank, in certain city areas, nobody's going to our stores anymore, then really make hard decisions. It's really deliver what the clients want. And if the clients change their attitude, you need to change. One more thing. Somebody asked me recently, what do you think, who will win, neobanks or traditional banks? And I said, really depends. Neobanks have a problem. Nobody trusts them. If you see the average amount of money people have at neobanks, it's a few $1,000. It's ridiculous. On the other hand, if you look at the digital services, the apps traditional banks offer, it's a disaster. The big question is, who is quicker? Are the digital banks, the neobanks, quicker to actually expand their business model and get trust? Then they win. Or are the traditional banks able to actually do way better apps and applications and marketing? And then they will win. It's a race. Yeah. It's a race currently. And I don't know who's going to win, to be quite sure.
Robin, before the break, we were discussing many of the opportunities that financial firms have if marketers really fully embrace what's available in the social media world. What common pitfalls should companies avoid when trying to sell financial services on social media?
The biggest pitfall is that you do not know your target group. So you should avoid doing something funny when your target group is not, want to laugh about a certain thing, or with being super serious when they actually want to be entertained. So know your target group really, really well and deliver what they want. And the other big pitfall is, don't give this young, cool channel to a young, cool person. Give it to a super professional internally or externally that really knows what he or she is doing. That's also a big pitfall I see all the time.
Wow. Robin, that is so funny because it brings back a memory. And, it's true in any marketing, but it's really true in any engagement you have with a person or an organization. I remember going to an event in Switzerland. This is probably 6 years ago. And it was an investment group, in fact. And I was going with my presentation I was doing at that time. I thought, God, this is really good. He's going to get these guys moving, guys and women moving. It's really good. I get in the room and I look in the room. It's just filling up. And not only do I see that every single person is wearing a suit, men and women, but they look as happy to be watching me as watching paint dry. It was terrible. I got on stage knowing this is going to need a complete transformation the way I'm presenting, because they're not buying anything I'm saying. They all are sitting there going, we know it better than you. It was about 90% men, which is way different than what I'm usually presenting to. And so it was a great example to me. Make sure you have your audience completely defined before you try to engage, or it's going to fall flat in your face. So, the pitfalls of knowing your audience sounds really rudimentary. But if you're selling a certain kind of product and you're doing it in a completely wrong way, it will never be successful no matter how good the product is. Robin, in your book, you mentioned outdated strategies. Can you give me an example or a couple examples of a strategy and what may replace it today, either from social to traditional to social or just within the social strategies?
I have two examples. Number one, if you are a decision maker or a bank or insurer, and you just, you don't have a strategy, for example, for LinkedIn, you're just randomly posting something. What's really interesting is if you don't have a strategy, who's your target group, what you actually want to achieve with it, and especially who do you not want to achieve, reach, then it's just random posting. That doesn't help you at all. I see this with a lot of decision makers. Finally, they like to do it, but they do it in not professional way. And the second one is every single TV ad, except maybe for Super Bowl, banks and insurers are bad. I mean, think about it. You need to pay gatekeepers like the TV channels money that they show stuff nobody in the world ever would watch on their free time to watch. And I think that's and we spend billions as insurance and finance industry. We spend billions on our marketing, and still we don't achieve anything that people watch voluntarily. Because I don't know, Jim, how about you? If you ever went home and said, honey, let's watch some ads from banks and insurers.
Yeah, exactly. It's interesting. You talk about hey, let's watch some ads. On my streaming service, I realize that now at certain points in a show, I'm given an option of which commercial I want to watch. So they give me 3 different commercials that I can choose from. I'm not too sure if that's targeting, but I can tell you right now, there is capturing of information based on what I like to see. So that's a very interesting dynamic when you look at it, the way media overall is changing. So, one major thing you mentioned about Super Bowl, that it's very much a waste of money for almost everybody. How do organizations, or how should organizations, measure success? Because I'll be honest with you, from my perspective and what I do socially, I have a heck of a time determining if what I'm measuring is really the way I should measure, if it's the best way to measure, if there's a better way to measure. So how do you suggest organizations measure their success in the social channels?
Well, it really depends on your goal, but let's go to the TV advertisement space. So, if you just create something that gets an award, and awards are just giving agency to agency, and everybody's celebrating them and herself, and have nothing to do with the reality. I mean, we just won an award, so I won't brag too much about it or say too many bad things about it, but I think actually it's ridiculous. If you produce things that really the clients want to see, maybe entertainment or a little bit of education, then what happens, and we see this about the ads we produce, is the people watch it longer. They don't skip after 20 seconds or 15 seconds or 6 seconds. They watch it a little longer. And so if you do really good creatives, the people voluntarily watch it. And I think that's one of the KPIs. What is the watch time, average watch time? Even if it's paid. If it's organic, you see, the reach. But on the other hand, we have sometimes B2B campaigns where the reach is not bad, not good, but the relevant people are seeing it. We have actually one project where they say, I actually want to reach only 50 people. That's what I want. Certain amount of 50 people. So it's super hard. On the other hand, if you have a small group and then have sales meetings and the people say, oh, I saw your podcast with this and that and a great point, then the people are watching. But it is, the more niche you go, the less the metrics actually count, because 1, 2, 3, 10 decision makers sometimes make all the difference, especially when it's like software for banks and insurers, that gets, changed every decade. Then it makes all the difference if 1 or 2 people see it and not 1 or 2 million.
So, Robin, writing a book is a labor of love. And, you wrote a really good marketing book about attention hacking. But almost everybody I interview that we talk about their book, there's certain elements of surprise that happen in the writing, where something you thought you'd find out was different than what you really found out, or something you're almost sure was true turned out to be false. What was 1 or 2 of the surprises you found when writing your book about attention hacking?
Well, there's a German version from it, 3 or 4 years old, and the English version, super up to date, came out this year. So the biggest difference when I translated it, or actually I had somebody translating it, but you need to read the book again, because I didn't want that, you get also a German accent while reading it. I think this podcast is already enough. But my biggest intellectual thing was, where I said I need to actually rewrite it, was when I started. And I think my first book, the German book, was like, guys, you really can just start, you can do it, post something, it's amazing, you will reach a lot. And back in the days, it also was true. 2018, 19, 20, especially with COVID, there was a lot of, a free reach out there but now there's not only one real estate guy on TikTok, but 200. So the biggest difference and the aha moment for me was, it's not about just starting and doing something. It needs to be good. It needs to be good. And either you need to be a natural talent, really great, or you have a super great internal team or external, but it needs to be really, really good. And you need to have specialists involved. It's a little bit unfair, because I would love to just do like the, hey, chucker, let's do it and just start. But you only get so far with this nowadays. It's a little bit unfair. Right. But that's my main aha moment. I was like, I thought I just translate that thing, but then I reread it and I was like, no, this really has changed.
Boy, and it gets back to using specialists to understand not only financial services, but understand social media. That to be good, you need to know who you're reaching. You have to know the product line, how it fits in with everybody else competitively. You need that head start. But to your other point they made very early in the podcast, don't think you can do it yourself, and don't necessarily think your traditional agency can do it, because there are nuances with social media that are very different than with traditional media. So finally, Robin, what's your number one recommendation for bank marketing in financial services?
Start your short video team now. Go to TikTok, go to Instagram Shorts, go to YouTube Shorts. Start your short video team now. Not yesterday, not tomorrow, but now.
With that in mind, and with the fact that most people would be served well by reading your book, how do people find you and see what you've done in your attention hacking for yourself and for your company?
Go to LinkedIn, or go to Robin Kira there, or go to TikTok, look for Robin Kira, or CEO of Diggy. That's nickname people gave me, like a CEO of Bro gave me. That's in German, so you don't see all the silly things we do there. But yeah, we eat what we cook. We eat our own dog food. Another quote of Gary Vee: we eat our own dog food. Have a look in there, and we're also happy to share some use cases we have if you want to see how can that be applied for a C-suite which cannot dance, naked like I do all the time on TikTok. Kidding.
Robin, you're a crazy fool sometimes. I watch you on TikTok and everything else. I'm going like, that is insanely creative. You have an amazing personality that is very outgoing and fun. You obviously attack everything with a very high level of passion. I really appreciate you being on the show today and want to have you back soon again.
Thank you very much for having the opportunity.
Thanks for listening to Banking Transformed, the top podcast in retail banking and the winner of 3 international awards for podcast excellence. We appreciate the support we have received to make this endeavor a success. If you enjoy what we're doing, please take some time to show some love in the form of a review. Finally, be sure to catch my recent articles on the financial brand and the research we're doing for the Digital Banking Report. This has been a production of Evergreen Podcast. A special thank you to our senior producer, Leah Hassage, audio engineer, Chris Fafalias, and video producer, Will Pritz. If you've not already done so, remember to subscribe to Banking Transformed on both your favorite podcast app and on YouTube for more thought-provoking discussions on the intersection between finance, technology, and leadership.